out and attending this session. This will be a very interesting session for all the FNO traders who wants to trade smart in futures and options with our various FIDE features. So there are various FIDE features we'll be covering in this session. So as Khushbu already introduced myself, my name is Tarang Solani, and I am the product manager of derivatives, and I will be the host for this session. So what are the various FIDE features we'll be talking about is firstly we'll talk about order slicing. Then we will have basket orders, bracket orders, trailing stop loss orders. Then we'll have a rollover spread orders. Then also there is margin calculator. We will be covering margin calculator is a very good tool to calculate any kind of an option trading strategies margin if you are doing any kind of an strategies. So to know how much margin is required. So we'll touch upon that margin calculator. And lastly, we'll also give you what are the benefits of trading FNO in HDFC securities. Basically, we have a very interesting features with us. So stay tuned for all these things. So without wasting any time, let's begin with our session on Trade Smart in FNO with our FIDE features. So first, we'll give you an introduction on order slicing in FNO, which is there in Proterminal, which is our advanced trading portal. So order slicing in derivatives, that is equity futures and options, is an additional features on the web trading platform that gives an edge to the active traders to divide the large quantity order into multiple order, which is known as the child order. Order slicing is important because if it's not done, then one single large quantity order can have direct implication on market liquidity and price discovery in very next moment. The one of the reason is to minimize and have control on cost of carry for holding a position. And consistent with this, we find that traders who engage in order slicing more often are more active and are large size traders. So basically, you must be knowing that in Nifty and Bank Nifty, exchange has some threshold limit, and above that you cannot place any order in a single order. But with order slicing, you can place a large quantity orders and then break down that large quantity to multiple orders and then execute it in the exchanges. Let us understand with our practical example how you can do the same. So we have logged in into Proterminal. I hope it is visible to you all. So this is our Proterminal, which is our advanced trading portal. So we'll just give you a small demo how to use order slicing feature. Now, before using any kind of an order slicing features, you first have to transfer the fund, how much fund is required if you want to buy any kind of an options, or how much fund is required. You first need to transfer the funds from your from your bank account to your trading account. Unlike like the process where in the journey of executing the orders, we ask you to hold your amount from the bank account. But in this case, while using order slicing, first you need to transfer the fund from your bank account to your trading balance account, and then only you have to execute this trade, or else it will get rejected. So how to transfer the funds? So here you will be able to see in accounts, you need to click on fund, hold and release. Then you need to click on go. And right now I have 25,000 already with me. So I need to transfer for more 5,000 if I want to transfer. So I can do it. How much amount I need to transfer? I need to type that amount, and then I need to click on hold. So once I click on hold, it will tell me that bank transactions is successful. Your transaction reference number is this. Now you will check the balance, how much balance I have. So you can also check the balance over here. In limits, you can check. I have 30,000 trading limit with me. So here I can place the order slicing order, which is equal to 30,000 rupees of margin of premium requirement. In that amount only I can place, or else it will get rejected. So how to place order slicing order? Let us understand. So suppose I want to buy 17,800 call option. I want to buy 2,500 shares, and I want to buy 2,500 shares. However, if you place this order in a one single order, I won't be able to do it because 1,800 shares is the cap for Nifty. Above that quantity you cannot place, but through order slicing you can do it. How? Let us understand. So I'll click on buy. So once I click on buy, I need to type the quantity. I want to buy 2,500 quantity at what price. Suppose I want to buy at 10 rupees, and I need to now click on order slicing checkbox. Once I click on order slicing checkbox, it will ask me at how much I want to divide this quantity in number of orders or as per the quantity. So I want to divide the quantity as per the quantity. So I want to divide for 2,500 shares. I want to divide in every 500 shares interval, every 500 quantity. So I will be getting 5 orders of 500 shares. And then I have a price option also, that at what level you want to place all these 500 shares, at one single price of 10 rupees or at a multiple price. Now I want to place my first 500 quantity at 10 rupees. So this is the limit. Now I have to select limit over here. And then in step up or down factor, I need to select at various interval I want to place. Suppose my second order I want to place at 9 rupees to buy. So 9 rupees is 1 rupee interval. So now this step up or down factors is been derived as per the number of ticks. So one tick is 5 paisa. So if I want to place 1 rupee lower than the 10 rupees, that means there is 20 ticks. It should be there for the second order to be placed at 9 rupee, and subsequent order at every 1 rupee interval. So if I type at 20 rupees over here, and now if I click on slice, I will be able to see my first 500 quantity will go at 10 rupees. My second 500 quantity will go at 9 rupee. My third 500 at 8 rupee, and subsequently all my 500 shares will be 1 rupee lower, and the last 500 shares will be at 6 rupees. So once I place this order, make sure once you place this order, you have sufficient margin. Now to buy 2,500 shares at 10 rupees, you should have 25,000 rupees in your trading balance. Then only this order will be executed, or else it will be rejected, because it won't ask you to hold the amount from the bank account. It will directly reject your orders. So make sure you first transfer the fund from your bank account to your trading balance, and then place this order. And then once you confirm this order, then it will show you that this order has been successfully placed, and you can check this same in the view order status. So here you will be able to see, you will be able to, this 7,800 call option has been placed at 8 rupees, 9 rupees, 6 rupees, 7 rupees, 10 rupees. So subsequently this all orders has been placed. I want to cancel all this order, so I can do it because I don't want to execute it. So I'll just cancel all this order. So I've cancelled all the order successfully. So this is how you need to take benefit of these order slicing features. If you are buying and selling in huge quantity, in large quantity, you can use order slicing features. However, you need to make a note of it that every order, every baby order, which we call as, is being charged as a individual order, and the brokerage will be charged as per the baby, or how much baby orders you make in one single order. So every baby order will be charged and in individual brokerage. So that you need to make note of it. Now let us go further with our second features called as bracket order. Now bracket order is a cover order type where you can create the first leg positions at market price, and simultaneously need to place a square of order for profit booking and a stop loss order for a single order panel. So in a layman language, if I make you understand what is bracket order, so bracket order is a 3-leg order functionality wherein your first order will be executed at market price, and subsequently you can place your target price and stop loss price in that same order window, so that in that one order you can execute your you can at first execute at market price, and you can place your stop loss order and your book profit price in a single order panel. So this is called as a bracket order. A bracket order also comes with a trailing stop loss functionality, which would help to minimize the loss further. In derivative or in HDFC securities, bracket order is only available for index futures and stock futures segment. As of now, it is not available for index options or stock options. It is only available for index futures and stock futures. Bracket orders can be placed only in web-based portal, that is N-Trade and Empowered. Bracket orders cannot be cancelled. It can only be modified at market price. So let us see, as we mentioned, bracket order is only available in index futures and stock futures. It is not available in options as of now. And how to use this bracket order? So bracket order, it's only available in N-Trade or Empowered, which is our basic trading platform. So once you go to N-Trade or Empowered, so you'll be able to see here, and it is only available in index futures and stock futures. So now let us take an example for Nifty. Now, if you want to buy Nifty future at current market price and in only same order, you want to place target price and stop loss, how you can do it? So you need to click on plus. Okay, now once you click on plus, in terms of margin, you need to click on cover, and in terms of market, you need to click on bracket. So I'll just repeat again. So if you want to place a bracket order, you have to first click on plus. Suppose if you want to buy Nifty future, you can click on plus. Then in terms of margin, you need to click on cover. And in terms of market, you need to click on bracket. So once you click on bracket, by default, your first order will execute at market price. And then in the same order, you can place stop loss and target. So suppose I want to place target at 18,000 and stop loss price. Of course, it comes with a two price where you need to feed in trigger price and limit price. I want to place stop loss at 17,500 and limit price would be 17,480, suppose. So here limit price, it will come automatically, but if you want to change, you can change. Suppose 17,480 is my limit price. I don't want to trail this stop loss. Once I click the order, so here trailing stop loss order is compulsory, so you need to trail the stop loss. So now your trailing amount, you need to identify it at how much interval I want to trail my amount. So once you click on 50 rupees, so every 50 rupees your amount would be, your stop loss would be trailed. And once you click on place this order, once you click on confirm, your order will be executed. Your first order would be executed at market price, and the subsequent two orders, your stop loss order and your target price will be executed, will be there into the exchanges. Since I don't have sufficient balance, I won't be able to execute this order. So you can also try it at your system. So first order will be executed at market, and then based upon your trailing stop loss, you have to, your first order would be 50 rupees interval, 17,766 minus 50, that is 17,716 will be your stop loss order, and your target would be set at 18,000. So this is how you can use the bracket order functionality. Now let us understand with the GTDt order. This is called as a good till date order. Now GTDt orders helps to take advantage of enhanced validity for your trade order and enjoys the freedom to buy or sell derivative contract at your specified price through a GTDt order facility. Now, to make you explain in a layman language, you can place GTDt orders based upon the validity date. You can select the validity date to remain this order open in the system. So once you select the validity date, this order will be open in the system till that particular time period. And if the price matches at what price you have initiated, the order will be automatically executed. So no need to continuously monitor the trade day in, day out. You can just feed in the price, you can feed in the validity date, and until that time, your order will be there into the system. And once the price matches, your order will automatically get executed. It allows you to buy or sell index futures and index options at a specified price till predefined validity date. So GTDt orders is only available for index futures and index options. This order will remain in effect until executed, expired, or cancelled till the validity date. So let us see how you can use the GTDt order functionality. So here, suppose I want to buy a Nifty call option of 17,800. I want to buy two lots of 17,800. Whenever it comes to 15 rupees, I want to buy. So what I will do is I will click on place GTDt order over here. I want to buy two lots, so 100 shares. I want to buy at suppose at 16 rupees. Let's take an example. So my trigger price would be 15 and this price would be 16. I can select maximum date till the date of the expiry of the contract. So 13 till 13th, I want to place this order and to remain in the system. Once I click on place order, once I confirm the order, it will go and I can check in the order book 17,800 call option. So this is pending. So I have placed this order, which is called as good till date order. I placed at 16 rupees. Current market price is 27.5, and this order will remain in the system till 13th of April, which is the maximum period where the order could remain, because the expiry of this contract is 13th of April. So this order will remain in the system till 13th of April. Whenever 16 rupees comes at before 13th of April, my order will automatically get executed. So it's a very good functionality. Now I don't want this order, so I will just cancel this order first. So my order got cancelled. So it's a very good functionality. However, this functionality is only available for index futures and index options, and it's available only in N-Trade or Empowered system. Now let us understand with another off-market order functionality. So what is off-market order? Is basically to make you understand in a much simpler language, is off-market orders means any orders which you place after the market hours are called the off-market orders. The off-market orders lets you place buy or sell orders in index futures and index options after market hours. Now these orders are sent to the exchanges on the next trading day. You can place an off-market orders and the below in the timings which are mentioned in the screen. In that timing only you can place the off-market orders. The timings are from 7 o'clock to evening 7 o'clock to 9:30 is the first batch where you can place the off-market orders, and the second batch is from the midnight 12 o'clock to next day morning 9 o'clock. So this is the timings where you can place the off-market orders. And what are the key features? And off-market orders can be placed with a limit price only. You cannot place off-market orders at a market price. Limit price should fall in a range as mandated by the exchanges. Orders are sent to the exchanges on the next trading day. Even if you are busy during the market hours, you can place an order later for the subsequent trading day. Limit orders can be placed only in index futures and index options. So as I told, this off-market order is also available for index futures and index options only. As of now, it is not available for stock futures and stock options. One can cancel or modify your order anytime before price is triggered. This facility is only available in N-Trade or Empowered. So there is nothing to show any demo for off-market orders, because it's a normal orders which you place in the normal market hours. In the same way, you can place the off-market orders after the market hours. After the market hours, whatever order you place are known as the off-market orders. Now, one more feature is the rollover spread order. Now, what is rollover spread order? So rollover involves now rollover, you must be knowing that it only happens in futures. And what is rollover? Rollover involves carrying forward of futures positions from one series to the next one. It is called as rollover. A rollover consists of two actions simultaneously: closing the existing positions of the current month in futures contract and opening a new position in the next month futures contract. This is called as rollover. Now, with the help of rollover spread window, now you can roll over the future positions in a single order window. So we have a rollover spread order window wherein you will be able to execute this order in a one single order panel, rather than going for first closing existing positions and then opening a new positions. Now you can roll over in a one single order panel. So what are the advantages of it? You can save time to roll over your futures position. You can roll over your stock or index futures in a one single order window. You can also place your desired bid or ask spread to roll over your position. So you can place at what rollover cost you need to roll over your position. So that is called as desired bid or ask spread. You can place it, and once that comes and matches, your position will automatically get rollover. So in high volatile market, this feature will be quite helpful to you to roll over quickly and with desired spread without any slippages. This feature is only available for index futures and stock futures. So as I mentioned earlier, rollover only happens in futures market. So it is available in index and stock futures both. So let us understand how you can use this rollover. So here I will make you understand. So rollover spread feature functionality is only available in N-Trade or Empowered. So So now once you go into HDFC securities, I'll just go to the market watch list. Now suppose I want to roll over my Nifty April month to May month contract. I have a Nifty April month futures with me and I want to roll over. So how I can roll over using rollover spread functionality? So in derivatives, you will be able to see the spread order. You can click on spread order. So here, if I have a long positions, I want to carry forward my long positions, I will use as a buy spread. If I have a short positions and I want to carry forward my short positions to the next one, I will use a sell spread. I have a long position, so I will take an example of long positions. So I will use buy spread. I will type the underlying which I want to roll over my positions. So Nifty is the underlying. Well, once I select Nifty, I will be able to see what expiry I want to roll over from April to May, from April to June, or from May to June. I want to roll over my positions from April to May month. So I will select April to May. So automatically it will be my April month contract would be sold off and my May month contract would be bought. At what price? Current difference between April and May is around 63 rupees. So if I type a desired spread at 64, once I place this order, once I confirm, my order will I won't be able to confirm right now because I don't have the long future. So this was just for an example perspective. But if you have a long future, if you confirm, your order will be automatically rolled over from April month series to May month. You can also press a desired spread if you want to spread if you want to press at 50 rupees whenever or 45 rupees. Whenever the spread between April and May comes to 45 rupees, I want to roll over my positions. So you can also give a desired bid or ask spread. Whenever this price matches, your position will automatically get rolled over. So this was about rollover spread order functionality. Now let us go further with a trailing stop loss order with book profit price. So we have this functionality called as trailing stop loss order with book profit price. Now what exactly it is? A trailing stop loss order is an order type where the stop loss is also revised towards the target at the same tick rate when the market price of a stock or contract moves in your desired direction. This order type helps minimize the downside by cutting the loss that can be incurred. It also provides an option to put book profit level at the time of order placement. So here you can place stop loss orders and a book profit order at a one single order panel using trailing stop loss order with book profit price functionality. So how you can use this? Let us understand with an example. Now first let me buy this 17,800 call option at market price, and after buying, if I want to place a stop loss order, trailing stop loss order, how we can do that? Let us understand. So first I will buy 17,800 call option at market price. So right now you can place this options at market price also. You can buy this at market price, place order, confirm order. So this order, if you want to check in the order book, will be get executed. So I have executed this 17,800 call option at 24 rupees 80 paisa. Now I want to place a stop loss order, and also there is a trailing stop loss order and also a target price order. How you can do it? Let us understand. So again, I will go to the market watch. This 17,800 call option, I will click on sell. Okay, once I click on sell, there is an additional details over here. Once I click on additional details, it will ask you to checkbox my trail orders functionality. So once I click on trail orders functionality, here I will be able to place the book profit price and the trail amount. So book profit price, suppose I want to place at 50 rupees. Whenever it comes to 50 rupees, I want to sell this option. I want to trail at every 15 rupees interval. So once I press 15, and then if I click on trigger price, automatically my first stop loss would be at 10 rupees 75 paisa, and I need to also put in the limit price at 10, and I want to place this order, and I will confirm this order. Now we'll check in the order book how this order will be placed. So my first order, my stop loss order is at 10 rupees 75 paisa. This is my stop loss order, and this is my book profit price at 50 rupees. So both this order have been placed simultaneously. If any of the orders get executed, second order will automatically get cancelled. That is, if my book profit price has been, if my book 50 rupees comes, if my book profit price has been executed, then my stop loss order will automatically get cancelled. Now this trailing stop loss order will behave like this: at every 15 rupees interval, whatever there will be a current market price. So let us understand how this trailing stop loss order will work. So current market price is 25.65. So my stop loss order will be at a 15 rupees interval, and so on. If my current market price goes to 30 rupees, so from that 30 rupees, my 50 rupees in 15 rupees interval would be, so my next stop loss would be at 15 rupees. So how much ever it goes above 25 rupees, from there, whatever 15 rupees interval it is, my stop loss order will be trailed at that price. So this is how trailing stop loss order functionality works. It is very good in a volatile market wherein you need to capture, if you want to capture a full up move, you can capture this in case if there is any kind of a reverse movement, so that your order will be trailed at a higher level, and you can your stop loss would be trailed, so that if in case there is any kind of an adverse movement, your order is your stop loss order is automatically trailed, and it's been booked out in case of adverse movement, so that you don't have to basically wait for a more downfall, because your order is automatically trailed and you can book that order at a higher price. So I'll just cancel this order first. I'll go to the order book. So pending order, I need to cancel this. And if I want to square off my order which has been executed, I can check in my net positions. So in net positions, you will be able to see whatever order has been executed and it's been open at current market price. Whichever orders are open, you will be able to see in net positions, and that is an intraday positions. And whichever orders have been open, you can also check in the open positions also. So if I want to square off, I can click on square off. I want to square off at market price. I will select market. I will place this order and I will confirm order. So once I do this, my order will be square off. If I want to check, I can check in the order book. So I've executed at 24.40. So this is how you can place the order. You can square off the order. Now let us understand about another functionality called as margin calculator. So margin calculator basically is if you are using any kind of a strategy in option trading strategies, you need to first calculate how much margin will be required to execute this strategy. If you are using a margin calculator, then it will be very much helpful to you to understand the margin requirement. If you want to take any kind of futures positions, or if you are doing any kind of a strategy, then margin calculator will help you to identify the margin amount, and based upon that you can execute your strategy by knowing how much margin is required. So let us understand where you can check the margin calculator. So first you need to log into HDFCsecurities.com. Sorry, you need to not log in. You need to just go to the website of HDFCsecurities.com, and under that, it's in the pre-login page only. You don't have to log in. Under products, under derivatives, you will be able to see this margin calculator. You have to click on margin calculator. Now, suppose if you want to initiate any kind of a margin, any kind of a strategy, like buying Nifty 17,500 call option of 27th April expiry, and simultaneously you want to sell 18,000 call option of same 27th April expiry, you want to understand how much margin is required. So here you need to select option index. You need to select Nifty for 27th April. Suppose I want to buy 17,500 call option, which is currently at 335. I want to click on add, and same way one lot I want to sell Nifty 18,000 call option. I will click on sell of the same expiry, which is quoting at 18,000 call option is quoting at 55. I want to sell at 55. I'll click on add, and I will click on submit. So once I click on submit, I will be told that the margin requirement is 17,624 rupees, and plus you also have to do a premium of 17,000. So total margin requirement would be 34,000 rupees. So this is how you can calculate margin. Total margin requirement plus total premium will give you the exact margin required to initiate this strategy, which is approximately 35,000 rupees of margin will be required to initiate this strategy of 17,500 buy and 18,000 call option sell. Let us understand with a different functionality, different strategy. I'll clear this off. Now, suppose I want to buy Bank Nifty 42,500 call and simultaneously sell 43,000 call, 43,500 call. So how you can do it? So you have to select 42,500 call of 27th April. One lot. How many lots you want to do? You can just select this. Now, for an example, I'm just taking one lot. I want to buy at 95. I'll click on buy, and simultaneously I want to sell 43,500 call option. Of the same expiry. I will click on sell. I click on add, and then I will click on submit. So total margin requirement is 20,400 plus 2390. So approximately 24,000, 25,000 rupees, 24,200 margin would be required total. You need to add total margin requirement plus total premium, and you will get this margin benefit of 65,000 rupees because this position is called as an hedging position. So this is how you can calculate the margin requirement through this margin calculator. It's a very useful tool for FNO traders who basically wants to understand if you are doing any option trading strategies. If you want to understand how much margin will be required, you can use this tool to understand the margin requirements. Now, last is the basket order. So what is basket order? Basket order is a functionality which allows you to place multiple orders at one time. Under this facility, you can place orders for multiple scripts at once. By creating a basket, you just create multiple orders for same or different securities and club these orders together to be placed in a single go. Now, this helps save time as all the orders in the basket are placed together instead of placing each order one by one. So basic features of basket orders are one can create 5 baskets with 15 scripts each. It can be also created for equity and equity derivative segment. Partial execution of basket is also possible. So if you are doing any kind of strategies which we have done, which we have shown you right now in this Bank Nifty, if you want to execute in a one single order window, here you can do it by using basket order. How? Let us understand. Again, if I go to N-Trade and Empowered, so N-Trade and Empowered is called as our basic trading portal. This is called as N-Trade or Empowered. So if you want to execute basket order, so let us understand in equity, you need to click on basket order functionality. Under equity, you will be able to see basket order functionality. First, I will make basket. So what I will do, I will click this setting buttons, this icon. I have to click this icon. I will click on this icon and I will create one basket. So your new basket, suppose is I want to I will rename basket as Bank Nifty. I will click on save. Now here also in basket order, you have to first transfer your funds from your bank account to your trading limit to execute this basket order, to use this basket order. Because if you don't transfer these funds, your order will be rejected. So first you need to transfer the fund from your bank account to your trading limit after seeing how much margin is required. So here, if I use this strategy, my margin requirement is approximately 24,000. So I want to transfer this 24,000 from my trading limit, my bank account to my trading limit. So I already have a trading limit of 29,964. So I will click on, again, I'll go in basket. I will select Bank Nifty basket. Now I want to buy 40, which index? So I want to buy 42,500 call and 43,500. I want to sell 43,500 call. So how you can do it? I will select derivatives, select option index, underlying Bank Nifty. 27th April. I want to buy 42,500 call. I can buy it at market price. I will click on add order. And simultaneously, I want to sell 43,500 call. I'll click on derivatives. I want to sell option index, Bank Nifty. Click on expiry 27th April, 43,500, which is at 18.65. I'll do get market price. You can also select limit, whatever limit is current market price. You will be able to see what is the current market price over here, and based upon that, if you want to go for a limit, you can also select limit, and then here you can specify the price. I want to buy it at market, so I will just select at market and add this order, and then I need to first save this basket. You need to remember first save this basket. Once you save this basket, you will be able to see 42,500 buy Bank Nifty and 43,500 call sell. Now I will go to place order basket. Now I have to select what basket I want to place this order. So I have created a basket called as Bank Nifty. I have to click on Bank Nifty. So based upon this, the Bank Nifty basket will come. Now if you click on both this order and place this order, your order will get rejected because I only have 30,000 rupees of margin. However, the margin requirement is 20,400 plus 3,000 approx. So around 24,000 rupees of margin would be required. But to make this strategy work at 20,400, that's a 24,000 of margin, first initiate a buy leg, place order. Order has been successfully placed, and then initiate a sell leg. So you'll be able to see now if you go to derivatives and order book, you'll be able to see that my Bank Nifty 42,500 call option has been bought at 88.15, and then 43,500 call has been sold at 18 rupees 30 paisa. You can also go to open position and check is my open position. So Bank Nifty 42,500 call option has been bought at 89.20 is my average traded price, and sold 43,500. So to click on the margin requirement, now if you see the trading limit, now only 7,700 rupees trading limit is there. So as I told, 24,000 rupees of margin was been required to execute this trade. You can also check the margin requirement by going to open position, and you can check how much margin is utilized by clicking on equity margin utilized. You can check around 20,000 rupees and 22,197 of margin has been blocked. So here you will be able to check the margin requirement, and also you have initiated strategy from a one single order panel. So it's a very easy where you can use execute multiple strategies from one single order panel with the use of basket order functionality. So now I'll just clarify. I'll just square off this position first at market price. So make sure once you buy and initiate any kind of a trade through basket order, first what you have to do is you have to first buy the buying leg first, and then initiate the selling leg to avail the margin benefit. The margin benefit of 65,000 was there. To avail this margin benefit, first initiate the buy leg and then initiate the sell leg. So this was all about basket order functionality. Now let us check about the HDFC Securities offering. We offer rupees 20 per order flat brokerage. If you don't have this brokerage structure with you, you can avail this by subscribing to our derivative value plan, which is worth of rupees 199 plus tax, and it's an annual charges, where you can get rupees 20 per order brokerage in futures and options. Also, you can get a free access to Proterminal, which is our advanced trading portal. And the second main features of trading in HDFC Securities is zero interest on derivative margin, which is paid against collateral shares. So how you can use, suppose you are short of cash, you don't have cash with you, but you have portfolio with you in the cash market segment. You can pledge some of your shares from your portfolio, and against that, whatever margin you will be receiving from us, you can use that margin to trade in derivatives market without any interest cost. So here we have taken an example that suppose you use 1 lakh rupees of margin to trade in derivatives from your collateral margin, that is from your shares which you have pledged. Our competitor do charge 18% interest. If you hold for 1 month, you will be charged with 1500 rupees as an interest cost if you hold this position of in FNO for 1 month utilizing this 1 lakh rupees of collateral margin. But same thing if you use this with HDFC securities, 1 lakh rupees of margin with your collateral, your margin, there won't be any kind of an interest charge to you. There is a 0 interest percentage where you can use your portfolio in a productive means. It's a very useful tool for the FNO traders who usually do FNO strategy or usually sells options or writes options where the margin requirement is quite high. You don't have cash margin with you, but you have good amount of portfolio. You can pledge that portfolio, and against that you can avail this facility. It's a very good tool wherein you don't have to subscribe anything. It's free of cost, and it's available to all our HDFC securities client. So that's it from our end. I hope this session was quite useful. Now we'll open this forum for a question answer section. If anyone has any kind of questions, we'll reply you to please write it on the question answer panel, which is there on the right hand side of your screen. We'll reply you back. So one question by one question was by CS Ananta Subramaniam. Can you please explain the trigger price trailing amount? So trigger price trailing amount is nothing but here you have an option. So I'll just explain you again. So right now, suppose I go to the market watch list, and if I want to place any kind of an stop loss order, suppose I have this 17800 call option with me. What I can do is I can sell additional details. Now once you click on trail orders, I will be asked to place a trigger price or a trailing amount. Trailing amount means at what interval you want to trail this stop loss order, or you want to just feed in the trigger price, and it will automatically trail your it will automatically define the trail amount. So now suppose if you feed 10 rupees as a trigger price, so your trail amount will be 9 rupees 40 paisa. But if you select this as a trail amount as 15 rupees, sorry, so your trigger price would be 5 rupees if you just click on over here. So 4 rupees 60 paisa to be precise. So it's nothing but it's just the same thing wherein interpretation is in the different way. So trigger price and the trail amount is more or less same. Wherein whatever you type, based upon that your stop loss will be calculated. One more question. What are M-Trade and M-Power? So M-Trade and M-Power is basically this. This is a web trading platform which is called as M-Trade and M-Power. If you go to Proterminal here, it will be automatically redirect to Proterminal, and here if you want to again redirect to M-Trade or M-Power, you need to click on M-Power. So we have two web-based trading portal. One is this M-Power, and the second one is Proterminal. This is the Proterminal. We also have one more trading portal which have been recently introduced, which is a pure replica of M-Trade or M-Power called as InvestRight. So once you go into InvestRight right now, so once you go to InvestRight, this is also there, which is a replica of M-Trade or M-Power. You can also explore this our web trading platform. But more or less, if you want to use, you can use M-Trade. Now again, if I want to switch to M-Power, so M-Trade and M-Power are called as the normal web trading platform. So one more question by Mr. Satish is, what's the difference between trailing stop loss order and bracket order? They look nearly the same. Yes, correctly pointed out. But trailing stop loss order, basically you can use this when you already have executed your trade and then you want to basically put the stop loss order and the target price order in a one single order window, then trailing stop loss order is a functionality which you can use. And bracket order, however, as I mentioned, is only available for index futures and stock futures. And you can use this bracket order when you want to execute your trade at market price first leg, and that in the same order window you want to initiate a stop loss and a target price. So bracket order is for them. So more or less they are same, but they have certain different functionality as I mentioned. So Mr. CS Ananta Subramaniam is asking, can you please revisit basket order? Surely. So now I will take an example. Go to equity, go to basket order. So once you go to basket, you can create first basket. Now I will make a basket of Nifty. I have to click this option, which is a setting symbol, like a setting symbol. Once I click on this symbol, I'll have to click new basket. I want to name this as basket as Nifty. I'll click on save. Now suppose I want to initiate a Nifty strategy, like I want to buy, I'll first clear this. I want to buy Nifty 18,000 call and simultaneously sell 18,200 call option. So first I will check how much margin is required, because then only you will be able to execute this function, because you have to transfer the funds into your trading limit. First check the margin requirement. Nifty 27th April. I want to buy 18,000 call. I click on add, and then I want to sell 18,200 call option. Same expiry. Click on add and click on submit. So margin requirement is approximately 17,600 plus 3,000. So approximately 20,000 rupees of margin is required. Now I'll have to go to this. I have in my trading limit 29,000, so I can use this. Now I will have to add 18,000 call of Nifty with an expiry date of 27th April. 18,000 call, which is there at 49. I want to buy it at market. I'll click on market, add orders, and same thing. I want to sell 18,200 call option of Nifty of same expiry of 27th April. Which is quoting at 1585. I want to sell at market. I'll click on add. I'll save this basket. My basket has been saved. 18,000 call option buy, 18,200 call option sell of 27th April expiry. I'll click on place order basket. Here I have to make sure I want to select the basket which you have named as Nifty, because in that only I have entered both the leg. I'll click on Nifty as a basket. Now 18,000 call, 18,200 call. Now if you place this order, both the order simultaneously, you should have a margin which is approximately 58,000 plus 20,000, because this is the margin benefit which you have got. 58,000 and 20,000 is the actual margin requirement. So 78,000 you should have to clear if you want to place this order both simultaneously. But here you just have because the total margin requirement is just 20,000, which is 17,500 plus 2,500. So 20,000. If you want to use that amount of margin, first initiate a buy leg. Place this order. First initiate a buy leg. The order has been successfully placed, and then initiate a sell leg. So in 20,000 rupees of margin, now it is 20,000 rupees of margin. If you see the trading limit, now it has gone to 10,000. So now 20,000 rupees of margin, I have initiated this transaction of 18,000 call option buy at 50 rupees and 18,200 call option sell at 16 rupees. So this is how you can use the margin order, basket order functionality. I'll just square off this order. So I hope I have made you understand the basket order again in much more detailed manner. So Mr. Partha Mitra is asking what happens if the sell price on the date of sell is lower than what has been contracted. Is there a possibility of a loss in the transaction? I didn't got your question, Mr. Partha. Can you just specify your question? One more question is Vasudev. Mr. Vasudev is asking wherever we can buy at our price, not market price. In cover order, no. In bracket order, your first leg will go at a market price compulsorily. It will go at a market price. Mr. C.S. Anatha Subramaniam is asking is do you have to transfer money from bank account to trading account? Yes, if you are using order slicing features and basket order. For that both features, you need to first transfer the fund from your bank account to your trading account. Mr. CS is asking, can you close the strategy in one square of action? No, square of all option is not there available. You need to close the strategy in an individual leg. I have answered most of the questions. I will be waiting for more couple of minutes. If there are more questions, we'll answer it. So we'll request everyone to feel free and ask whatever questions you have and also provide us the feedback. How did you find this session was useful? Or if you want any kind of an changes in this session, do let us know. Still waiting for one more minute. If you have any kind of questions, we'll request you to please feel free. If you want to see the recording, you can see the recording in our YouTube HDFC Securities channel. You can see this recording for your reference, so that if you get stuck, you can also refer to that recording to make sure about the functionality, how it has been used for different order types. Mr. Partha is asking, if the index option bought on a date X and contract to sell on date Y, and on that date Y, if the index option is lower, what happens? So of course your order will be pending. Suppose you buy an index options at 50 rupees on today, that is 11th of April, and if you place to sell this index options at 80 rupees, that is on till 13th of April, if you place this GTDt orders, whenever it will come at 80 rupees, your option should be squared off. But somehow it doesn't comes to 80 rupees, but it goes to 20 rupees and substantially it expires at suppose 10 rupees, then your order will be pending and your position will be remain open. Mr. CS Anantha Subramaniam is asking, how did you calculate margin for bracket order or basket order? Can you just reconfirm it is for bracket or basket? Yeah, Mr. CS, and can you confirm it's a basket order? So I calculated the margin from the margin calculator. So I will give you how you can see this. Go to hdfcsecurities.com. So once you go into hdfcsecurities.com, you'll be able to see here under products, under margin calculator, you will be able to see under derivatives, there is a margin calculator. So once you click on margin calculator, here you need to fit in the legs which you need to buy and sell, and there you will be able to check the margin from here. I hope I have answered your question. So I think there are no more questions. So we'll just conclude this session. I hope it was quite useful. We also come out with numerous kind of this webinar to make your trading to make your trading more useful, and also to guide you in your trading, how to trade in derivatives. So we also come out with various sessions. We request everyone to please attend all this session. You will be intimated through the mailers whenever we have such kind of an webinars. And also you can visit to our website. In the banner that will be there, you can just visit this website once or twice, so that you will be informed what kind of an webinar we have been having. On a daily basis we conduct a webinar, so we'll request everyone to please attend that to improve your trading performance. So I hope this session was also quite useful to you all, and it will help you in your day-to-day trading. So thank you all for attending this session, and have a nice trading day. Thank you.
Yes, thank you, Tarang. Thank you, customers, for joining us. Thank you.